Hey folks, how you doing? May 19th, trade review. Hope you're doing well today. So let's go over the trades today. I had a very interesting trading day. I always say that every single video. I'm going to stop saying that. So I'll go over all of my trades, and overall it was a very boring morning I found for the broad market. Unless you were trading some individual stocks, there wasn't much going on, okay? So I found myself in a put scalp very early on, and I made a couple of mistakes. The primary mistake was not grabbing the profits and not putting in that break-even stop. And again, this is just a mechanical error, and it happens over and over again to anybody learning trading. It's happened to me a number of times where I'll take a trade, and when you take the trade, and if you don't put in your break-even stop after you've been in profit, you're automatically going to be susceptible for the market to go against you. And when it goes against you, you're also susceptible to make the errors of holding onto the contract because you're trying to find reasons for your trade to still be right, which is obviously the wrong thing to do. So the best thing is to just put in that break-even stop, and that's it. Okay, so I'll go over some of the technical analysis to start here. So basically, yesterday, bull trend day, beautiful. And I was watching, the levels we were watching was generally the low of the consolidation of yesterday. So 294.50 was the approximate level. Also, the high of day yesterday was a great level to be watching. And if you look at the NASDAQ, it's something like this. So this would have been the low of the consolidation, would have been a 93.13.6. And again, this is the NAS 100 USD on TradingView. This is not futures levels. The futures levels are slightly different. So you can go into your broker, and sometimes I look at the ES chart to gauge the futures levels that I'm looking at, but that's pretty much it, okay? I was also watching this kind of euphoria high that had occurred in the pre-market session, and when we pulled back in the morning, we were kind of back into this register. So I went in today with a line in the sand saying, okay, as long as we hold above the lows of the consolidation yesterday, most likely we'll be slightly bullish today. We held the lows and we just grinded up all day. And I found myself in a bearish trade early on, and I didn't cut it quick enough, and then I ended up holding on too long. And later in the day, I was shorting calls because I was watching how these markets were behaving. And when you're seeing this sort of price action, that was giving me some signals. So obviously we had some crazy action after going into the close here, but I want to share with you some of my insights about how I was watching this market trading today and some signals that came through that were bearish. Okay, one thing that kept me confident today was how the Qs were acting around this general area. As you can see, after the big move up, we consolidated and then we're chopping around this general area. Okay, if you were watching the tape during this scenario here, you would have seen very clearly that the offer at 229.25 kept refreshing many times. You can see here we push up and then we're chopping. We might get a little push up and then we chop and then we push back down. And now during a lot of this action, there was a lot of held offers around the 229.25 and up to 229.30, okay? And then later on in the day, we managed to lift because there was some strength in some of the tech sector names like Amazon and Facebook. Okay, XLF, just real quick. XLF was playing with the $22 level from yesterday, and that level was a key resistance. In fact, at 22, it was acting as resistance and as support very briefly. So you can see we push up, hold 22, push above it, and then you can see how we're chopping in this area. And when we finally pushed below it, for me, below 22 was bearish, above 22 was bullish. And you can see how we struggled to stay above it for a large part of the day. We tested it one last time here, again, changing that 2-minute trend, no follow through, straight into a dump right off that 22 level. And again, bounce, retest again, right that 22 level, and then a huge dump into the close. So really crazy price action, guys. And I just want to say one thing is that notice how the news and stuff is coming out with positive news regarding vaccines and how there's news about potentially reopening the country and all this stuff. Sort of good news is coming out. Now, don't quote me on that because I don't know what is good news. But while there could be like potential good news in sight, you see the market acting more bearish or more neutral bearish. Whereas when everybody was tied up in their homes thinking that the economy was going to shit, the market did nothing but go up. So it's all psychology, guys. So I'll show you my trade log. Here we go. First thing, so I got in a put here first thing at 934 when I saw it starting to break bearish. I immediately had to be selling that as a scalp. I held on to it too long, okay? I ended up buying again, averaging down, and then later in the day, I managed to sell it and get out and kind of work my way out of the position. But later in the day, I was actually bag holding these puts. I ended up holding them way too long, and my average price was around $40 on these things, and they were trading around $20, $25. So that's called bag holding right there, and you should never do that. And long options, obviously, they can get killed fast. So we could have easily just kept grinding up all day and then gone up, break the highs of 296, and then easily continue higher and keep going up to 297. But we had that thing that happened near the end of the day, that crazy dump, kind of saved me, and at the end of the day, very green in my account thanks to that dump. But the problem with that, if that dump would have happened, I would have ended the day red. So that's the story. All right, so I got into the put right here, and ideally I would have been taking profits here, but I didn't. I don't know why. And then I just sat through this whole entire rally, and I didn't do anything about it. And then I found myself averaging down right here. And then I believe over here is when I sold my first call spread. So I was selling some out of the money calls. You can see here I sold the 297s at 10.23, and I sold another spread at 10.57. Collecting some premium, selling those 297 out of the money calls, all right? And I was basically basing that trade off of the high of yesterday. So if we were going to break above high of yesterday, I was going to have to manage that trade. High of yesterday was very up there, like a euphoria top almost. So the moral of the story is I was in these puts for a majority part of the day, and I managed to get out of them here. I managed to get out of some puts here, but I held on to a contract, and that was bad. I should have just got rid of it all there, okay? And I averaged down the puts again here, and then I bought one more contract there, and then here, there was a mini scalp that I had. So imagine this. This is what's happening. The market's in sort of an uptrend. We're grinding higher, and I'm watching 296. And I don't know what got into me. I was a little bit tired, actually. And this is why don't trade when you're tired, guys, because you're going to mess up. So I impulsively bought calls right at this point, right on this break. And I got in too late. In fact, I should have had a conditional order to get me in a little earlier if I wanted to really get in on a true breakout. Because if you actually wait for the breakout to happen, your hand is not going to be fast enough to get you into the position. So it's better to put a conditional order. So if I would have said, I want to be long as soon as SPY trades over 296, so I'll say buy this contract, condition being SPY trading at that price. And that works quite well for stop losses and everything. And what I did was I bought a call there, and then I immediately sold it when I saw we were getting no follow through, okay? So I picked it up there for, well, lucky I sold it, eh? I picked it up for 85 and I sold it for 80. I took a tiny loss on that trade because I saw the kind of breakout we were getting. And again, I've seen this stuff a few times already, guys, where we get breakouts, no follow through. And that's why you should be fading failed breakouts, not buying breakouts. As long as you continue to buy breakouts, the professionals will continue to fade against the failed breakouts. And then if you're in a breakout and it failed, you're screwed, rest in peace. So basically my average price on these 290 puts was $40. And this thing just came out of nowhere, basically. I managed to get out of these contracts here when this happened, and I started selling them right away. I sold one for break even, and then I sold one at $60 and one at $65 at 3 p.m. right here when I saw that SPY was literally, okay, that's not even the end of it. This was it right here. When I saw SPY, how close SPY was to the low of the day, I said, okay, look, I'm going to get out because judging on how much we moved, I'm going to take profits because these puts are still out of the money. And that's it. So I lucky I got out. I would have got out near the bottom there on that last contract. And look at the bounce we got. We bounced nearly up to the highs again. And this was unbelievable. Imagine this huge range right near the low of the day. And then a huge bounce for a lower high. And you know, I've seen there was one trading day a couple of months ago, I remember, where at the end of the trading day around 3 o'clock, there was a massive dump and then a huge spike, break the high of the day, and huge euphoria move and close at the high of the day on a Friday, I believe. I remember that day very clearly. And that's what, when you trade markets enough, guys, you learn that anything is possible, okay? We could have easily gone up and broken the highs and gone to new highs after this dump, okay? You did not know that we were going to break to a lower low, okay? In fact, I thought after this bounce, I thought, okay, based on how we topped out there, the more likely scenario was going to be some sort of equilibrium and tightening range, or maybe a second leg down if we were to see more volume. And the volume came in, we sold off into the close. So I was lucky to get out of these puts down here. And obviously I could have held them, but you know, I'm not going to hold through the bounce. Basically, these puts were trading around $20 here. Then they went to $60. And then here they're probably back to like $30 or something because volatility increases, obviously. So the premiums are going to go up. And then obviously probably closing above $1 today. Anyhow, so I took profit on my short call spreads near the lows here. And I'm swinging the last one because it's 297. And what are the odds SPY opens above 297 tomorrow? Very low. So basically, yeah, one great tool in Trader Workstation, I'll show you, probability profile this, and it will show you generally what the profit probability is of your options trade based on how much time value is left and based on likely scenarios that are occurring, okay? Look at this right here. So May 20th, it'll show me this position based on different scenarios that would occur in the underlying. So if the current price stays there, that'll be your profit. If we have a 1% move up, your profit. And so basically their profit will change based on the different scenarios that occur in the underlying instrument. So that's a very important thing that you can use in your trading. That's a baseline probability that's given to you based on the option Greeks. So that's actually a theoretical probability that the market is actually thinking. All right, guys, so that's going to be my trade review for today. I ended the day up green, probably 12-13% thanks to this massive drop. And again, I still think that what I did today wasn't really great in the sense that I was averaging down those loser puts and they could have easily gone to zero. We could have easily kept pushing higher, okay? All right, I wish you a great day. Hope you enjoyed the video. Please leave a thumbs up, subscribe, everything. Take care. Bye. Love you. Bye. Cheers.